Ladies and gentlemen, good afternoon, and my name is Muzarowska, as it was already said. I'm a tax lawyer, and I'm Business Development Manager at Dixcart's Malta office. Today I will start my presentation with information about Dixcart Group, about Malta office, about taxation and opportunities that Malta companies offer. So Dixcart Group provides commercial and professional services to international organizations, families and individuals, and we are present already almost 50 years on the market, and we are having 10 offices in 9 jurisdictions. Here on the map you can see the places where we have offices, and it's Cyprus, Guernsey, Isle of Man, Malta, St. Kitts and Nevis and Caribbean. We have 2 offices in Portugal, one in Lisbon and one in Madeira, and offices in South Africa. We have office in Switzerland in Geneva, and office in UK. When it's coming to type of services we are providing, we're providing pretty complex services, and we provide services to corporate services. We help with setting up an administration of companies, different type of companies. We do accountancy and all the administration which is needed to help those entities within our jurisdictions. We help obtain different licenses. We have business centers. So for purposes of substance, we have offices which we can rent to our clients or different desks. We do relocation services for individuals, so we help to obtain residence or domicile status or passports in the jurisdictions where our offices are located. We do a lot of wealth planning, and we help to set up trusts and private foundations, and we do management and administration of those entities. We also deal with yachting, shipping and aviation, and with IT business, IP rights, and e-gaming. So a few words about Malta, just probably a little reminder where it is. It's one of the smallest countries. It's located southern to Italy, and it lays between Europe and North Africa. Malta has 3 islands. So there is a main island, Malta, little one, Comino in between, and Gozo. So Malta is pretty small. It takes only 45 minutes probably to cross the island from south to north. Of course, if there is no traffic. And what is important about Malta, Malta is a full member of the European Union since 2004. Now, like, going from the information about Malta, I wanted to say that Malta is not just an island with a sun, sea, heritage, and a good lifestyle. It also has its cherry on the cake, which is corporate taxation. So before I move to the corporate taxation, it is worth to mention that all my examples would refer mainly to limited liability companies, which are the most popular type of entity to be established in Malta. And to be able to set up company in Malta, you don't really need to come personally to Malta. All setup procedures can be done remotely, and of course under special terms and conditions. So to set up a company in Malta, it's not a very complicated process. It takes, of course, after collection of all the due diligence, around 3-4 working days. Their minimum share capital is 1,200 euros, and only 20% should be paid. So the payment for their share capital is only 240 euros for the beginning. So this is pretty quick, pretty easy way to set up a company. Malta has English as official language, so all the corporate documents, all the register forms and register online, they're all in English, so it's very easy to understand. You don't need to have any additional translations. And Malta companies are taxed at 35%, which is our corporate rate. And it sounds that it's pretty high, much higher than in a lot of countries, but there is an opportunity for Malta companies to obtain tax refunds paid to non-resident shareholders in their personal capacity. That is why we usually suggest a Malta double tier, where the trading company pay the tax and the holding company receive both the dividend as well as a refund. I quite often speak with different advisors and clients, and there are a lot of questions to Maltese taxation and all that refund system. I'll try to explain now, and I hope it will be more understandable how it works. So basically, the refund is not a requirement. Shareholders of such a Malta company are entitled to claim a certain tax refund, and that refund would depend on the nature of the company. So basically, if trading company receives income from trading, so it receives active income, for example, it buys and sells goods, or it provides advisory services, the company from the income would pay 35% tax, and then would be entitled to claim 6/7, which is written in the legislation 6/7, but in fact it would be 30% of the refund. And if a trading company would receive passive income, so for example, income would be constituted from interest or royalties, such a company can claim 5/7 refund. So the company would claim 25% of the refund back. So once the company has filed the tax return and pay the tax, the company can declare a dividend. This is actually the condition. The shareholder can submit a claim form for the tax refund, but the payment of the dividend is obligatory here. So if we look here at the example that we have on the presentation, we have a trading company, let's say Trading Company Limited, which was registered on the 1st of January 2019. The accounting year would end on the 31st of December for such company. Next year, on the 31st of May 2020, the audit of the Trading Company Limited would be concluded, and the company would make a dividend distribution to its shareholders on that date. Tax return would be filed by no later than 31st of May 2020, and the claim for the refund would be done in the same time, basically on the 31st of May 2020. What is here important to say that according to the legislation, the tax refund is stipulated to be done within 14 days from the payment of the tax and their refund claim. There are some, because there are a lot of companies which are which are doing the claim of the tax for the tax refund. There are some delays happening. And if you look at this structure, there is a trading company and there is also a holding company. Why do we have a holding company? It's not really necessary. The shareholder of the trading company can also be an individual. So trading company would receive income, would pay 35% tax, and the shareholder who is individual can also do their tax refund claim. Although receiving dividends and the tax refund could trigger personal income taxation on the level of physical person, according to the rules of the place of the resident of that person. So, for example, if instead of holding company, we would have Mr. X, and that Mr. X would receive a dividend and would receive the refund of 30%, that Mr. X would need to declare in the place of his residence, so in his country where he tax resident, he would need to submit the income that he received, and it would be taxed at the rate of the personal income tax in his jurisdiction. Of course, it all depends on the jurisdiction, and you would need to look case by case, but in general, we advise that double tier structure when holding company would receive dividends and refund, and such company could reinvest money or give it as a loan or invest or do payments to subsidiaries without being taxed on the level of the individual. Now I would move to participation exemption. Starting from 2007, Maltese tax system introduced participation exemption. It has pretty wide definition. That is why it makes Malta holding regime very attractive. I would like in my presentation to go through the definition and conditions that should be met to be classified as a participating holding. So income and gains from disposal of the gains from disposal of the participating holding derived by the company which is registered in Malta from a participating holding are exempt from Maltese taxation. It's not compulsory, but it is an option. So the conditions to be met in order to for the holding to be classified as participating holding are following, and if you follow the presentation, so basically a company which is Maltese resident would hold directly at least 5% of the equity shares of company which is non-resident in Malta, or such a company is entitled at its option to call for and acquire the entire balance of the equity shares, or such Maltese company would be entitled to first refusal in the event of proposed disposal, redemption, or cancellation of all the equity shares of that company, or that company would be entitled to either sit on the board of directors or appoint a person which sits on the board of that company as a director, or such Maltese company would invest minimum €164,000 in a company that is not resident in Malta, and that investment in the company non-resident in Malta is held for an uninterrupted period of time of 183 days, or where the holding of such shares is for the furtherance of its own business, and the holding is not to held as trading stock for the purpose of a trade. So basically, one of the conditions needs to be met to be able to use participation exemption, although there are some anti-abuse provisions, and to be able to use participation exemption, one of the conditions needs to be met. So basically, company which is non-resident should be incorporated in a country or territory which forms part of the European Union, or non-resident company is subject to any foreign tax of at least 15%, or a non-resident company does not have more than 50% of its income derived from passive interest or royalties. So this is what comes about participation exemption. So all those conditions which I mentioned, I would say from the experience, companies which are using participation exemption, they would fall under the first requirement of holding at least 5% in their foreign company. But that is why, like, there are a lot of other conditions to be met if it's not the case of 5% holding. Now I'll move to new regulations for Malta. It's consolidated group rules, which were published on last year in May, and they came into effect for year of assessment 2020. They're related to fiscal units with accounting periods starting in the calendar year 2019. So basically, this is another option which Malta companies have starting from this year, and it would give some advantages. And one of the advantages of the consolidation regime is the cash flow benefits that can be enjoyed by eliminating the time lapse for the receipt of applicable tax returns, tax refunds, once the relevant returns have been filed. So new consolidated group rules will make income tax calculation, reporting of group companies and other group matters much easier. And this is because all income, outgoings and expenses which are derived by transparent companies will be considered as if they incurred by the principal taxpayer. And the same applies to transactions between principal taxpayer and transparent subsidiaries. So let's first look at fiscal unit and how it is established. So parent company and any relevant subsidiaries can make an election to form a fiscal unit, provided that each subsidiary has same accounting period as a parent company and as long as 2 of 3 conditions are met. So the first condition is that parent company holds at least 95% of the voting rights in the subsidiary company. The second condition is that parent company is beneficiary entitled to at least 95% of the profit available for the distribution of the ordinary shareholders of the subsidiary company. And the third condition is that parent company would be beneficially entitled to at least 95% of the assets of the subsidiary company available for the distribution to its ordinary shareholders in the event of the winding up. Where such an election has been successfully made, each at least 95% subsidiary will form part of the fiscal unit of the parent company, with such subsidiaries being referred to as transparent subsidiaries. Where a transparent subsidiary is itself a parent company, its 95% subsidiaries will also join the fiscal unit, which means, like, if you look at the graph, we have parent company, we have a subsidiary. So if our subsidiary would have more subsidiaries, they would also, it means that they would also form part of the fiscal unit. Principal taxpayer in our example parent company should be a Malta company and should be resident in Malta. Transparent subsidiaries can be companies registered and residents outside Malta. And to form a fiscal unit, there should be at least 2 companies. So basically, it's something similar like with their double tier structure. You would probably would like to opt for having Malta parent company and Malta subsidiary to form a fiscal unit. As I said in the beginning of their explanation for their fiscal units, it is an option, it's not an obligation. So if you have a couple of companies, you can register them as a fiscal unit. Fiscal units give a level of flexibility, and they give a taxpayer an option to make tax payments easier, because there won't be a payment of the tax and then refund back. The fiscal unit would basically prepare the tax return, and they would pay only tax which is due without tax refund being involved here. And this is basically the benefit of their fiscal unit, which we have recently in Malta, but it gives more options. And moving to another option for Malta companies, instead of having the option of the refund or fiscal unit where you would pay only effective tax, Malta introduced the notional interest deduction regime a couple of years ago, which came into force 2018, and this is an innovative way for companies to reduce their tax liabilities. This option will be of the greatest interest to companies with large equity balances. So I'll try to explain you what is it, how it works in a few words. So notional interest deduction allows companies to deduct a notional interest amount based on the risk capital of the company. Such companies will be able to claim a deduction against their chargeable income for notional interest deduction deemed to be incurred on their equity capital. Previously in Malta, debt interest has been tax deductible, whilst dividends haven't. Risk capital is defined as share capital, share premiums, retained earnings, interest-free debt, and any other equity. So notional interest deduction is calculated by multiplying the notional interest rate by the company's total equity at its financial year end. Notional interest rate is defined as the risk-free rate, and the currently yield to maturity of Malta government stocks with a remaining term of the approximately 20 years plus 5% premium, and if I'm not mistaken, now it's on the level of 2%. Notional interest deduction claimed in any 1 year cannot exceed 90% of the company's taxable income. Any excess can be carried forward indefinitely, so it can be deducted against taxable income in the future years. And remaining income is taxed at the standard rate of 35%. So in with this option, no tax refund is paid to shareholders under the notional interest deduction regime, and this therefore removes the need to have a double tier company structure. Where a notional interest deduction is claimed, the shareholder or the partner of the company will be considered to receive the same amount of notional interest income for Maltese tax purposes. And if a shareholder is not resident in Malta, the deemed interest income will be exempt from tax in Malta, providing that certain criteria are met. And this is it about notional interest deduction. Just as a conclusion, I would like to repeat a couple of the options that Maltese companies have. So, for Malta company, including different permanent establishments of foreign companies. There is ability to choose between different options for their corporate taxation. So the first one that I presented here, it was a Maltese tax refund system, where shareholder would receive 6/7 or 5/7 refund to the would receive as a shareholder. Then second option was creation of the fiscal unit, where the tax would be paid as an effective tax, which companies forming the fiscal unit earned and are due to pay. And the third option is notional interest deduction. I thank you all for the attention. If you have any questions, please feel free to ask them here during our presentations, or you can contact me also after the conference. You have my details on the screen, email, phone, and our company website. Thank you.
Thank you, Maria, for this very interesting presentation about Malta, the different changes which have taken place and the advantages it is offering. There we have a question, how it is concerning the tax refund. Is a tax credit or a cash refund?
It is a cash refund because it is not done back to the entity which is paying it. So the refund is not going back to the trading company, it's going to shareholder. So it's a cash refund. It takes normally it should take a couple of weeks from the time when the tax is paid, and the refund is paid back on the bank account, which we submit basically on the tax refund claim form.
Then another question: can the holding company be incorporated outside Malta? For instance, can the company be incorporated in Singapore?
Answer is yes. It can be basically incorporated in any jurisdiction. The thing is that then it would be question to the advisor and probably tax advisor in that jurisdiction to see if how such refund would be qualified for the jurisdiction where the holding company is. So normally there is no requirement for holding company to be registered in Malta, although by majority of such structures have their holding company in Malta, because for Malta tax authorities, for Malta understanding that refund is not an income and is not taxable. So just for the easiness of the accountancy and the cash flow, most of clients would put Malta holding, although it can be anywhere.
Okay, and then following question: is the tax refund guaranteed? Have there been cases of the tax refund being rejected? And he's a little bit confused, the one who has the question on the tax refund conditions. I have the impression that there's a list of conditions to be satisfied. Is it indeed a bit complicated?
Actually, it's not. It might just sound as complicated. There are no really conditions, and it's not to the discretion of the authority to pay it or not. Of course, like the conditions should be met that owner of the business, so shareholder or beneficial owner, about their holding or like trading company would be foreigner, not resident in Malta. So this is a condition. So if this condition is met, then the refund is paid. So it's not very complicated, and it's pretty straightforward. So, or the person is resident in Malta or not. If not, then the refund is provided.
Okay. And then a question: Cyprus is also offering quite a few things in this field. And what is the difference between Malta and Cyprus? Can you have a quick answer to that, or is it?
So basically of course, there are some solutions, I would agree, they're pretty similar for Malta and for Cyprus. I believe there are some differences when it comes to corporate taxation. So In Malta, it would be it can be 5 or 10% effective tax rate. In Cyprus, we have corporate taxation on the level of 12.5%. So this is the main difference about the notional interest deductions. I know that Malta and Cyprus both have it. Their fiscal units are the same. So basically, it's a tax rates. I know that now Malta also has a IP box regime, which is pretty favorable and can be obtained pretty low corporate taxation, which is like income from the usage of the IP rights. So this is like those differences.
Okay, thank you. And a following question, what about tax consolidation regime in Malta? Does it work well in case one Malta holding company and 3 to 4 Malta operating companies? Is it easy to consolidate it?
I might assume it's easy, although as it's something new for Malta, because those fiscal units work from this year. Unfortunately, I cannot tell you from the experience because we have only first units to be registered and to be submitted. I believe, as Malta being as a business-friendly jurisdiction, it shouldn't be difficult, but because it's something pretty new, like we don't really have a long history of those units being registered and submitted their returns.
Okay, and have there been successful examples of application of Malta IP box regimes? If yes, please could you share it?
Yes, they were. I know that companies are registering. I'm not personally, I didn't do any submissions, so I cannot tell you if like some examples of my clients, but I know like my colleagues are doing submissions and they are successful.
Okay, well, thanks a lot, Maria, for all the answering of the question and for your impressive presentation. And since you have given your address, I'm sure there will be more questions which you can answer, and I'm sure open for receiving clients. Hopefully that all goes well with it.